Assalamu alaikum viewers. We have already completed the accounting cycle and this is Dr. Safdar Husain Tahir, Associate Professor, Lalpur Business School, Government College, University, Faisalabad. I did postdoc from UWA Business School, the University of Western Australia. We have already completed the three phase of accounting cycle and we have already learned this is the revision of these lectures. We have already started in the phase one. There are comprehensive questions in the phase one. We have 10 different entries. These different entries are debited and credited, and this is what we have already made the structure of the corporation by debiting and crediting assets, liabilities and owner equity. Then in the phase second, we start this business and we sell some inventories and we bear some expenses. Certainly we have debited and credited these entries into you can say incorporating in the previous entries, and we have debited and credited and making the generalization. In the third phase we have the adjusting entries. These are also very important for the true pictures of the financial statement. Certainly, we generalize these entries and we also added these entries into their ledgers account. This is the first generalization in the phase one. We did this. This is the second phase generalization and this is the third phase generalization. Total journal indicate that 65 lakh 95,000 debited and 65 lakh 95,000 credit. So the total debit is equal to total credit. Look at the ledgers account. The ledgers account show this balance. This ledger account show 20 lakh rupees balance and office equipment 1 lakh and 50,000, delivery 7 lakh and account payable 11 lakh and 60,000, furniture 1 lakh, note payable 5 lakh and building 12 lakh and computer software 90,000 and security system 50,000, shop shelves and display unit 1 lakh and 20,000. And this is the inventory account. The after the 31st December, on 31st December, the balance of the inventory is 6 lakh and 50,000. Cost of goods sold account show that it's a debit balance into debit balance of 2 lakh. This cost of goods sold account close to the income statement. So this account we cut here and paste in the income statement. Similarly, sales revenue 4 lakh we cut here and paste in the income statement. Prepaid rent show that there is a balance of still there is a balance of 20,000 rupees. Advertisement expense shows that there is 20,000 and we also cut this account and paste into you can say income statement. Salaries expense 50,000 cut and paste into a income statement. These accounts salaries, revenues and expense are generated from the initial period of operating cycle, and then these accounts closed at the end of each accounting cycle. Owners drawing close also in owner equity. Rent expense close to income statement. Unearned revenue simply this is the liability, and liability show in the balance sheet. A maintenance expense, that is close into income statement. Account receivable is also an asset account. Consultancy revenue is also close into you can say in the income statement. So this is the trial balance. This is the trial balance. All the ledgers account show this one, and then some of the account close into income statement. The income is 1 lakh and 50,000. These are the you can say these are the revenue accounts and expense account and cost of goods sold account. All these three types of account close and becomes a one account, that is net profit of 1,50,000. Then there is owner equity. We close the net profit account into owner equity, and it will become owner's capital, new owner's capital. The new owner's capital closing of 2024 is 21 lakh and 50,000. So this is the balance sheet. It will give you the true picture, and what we are going to do, we are going to reach at this stage. Certainly, accounting is not a difficult thing. It's an easy way. I think with the one click, with the one example, you can learn the whole accounting cycle. These are the three phases. The first phase, we generated the structure from the assets, liability, owner equity. Then we operate it in the forms of sales, revenue, and expense, and then we do some adjusting entries, and here is a true picture of balance sheet. Thank you so much after going through the 16 lectures of accounting cycle.